watching the Property Show West Edition. Welcome everyone. We have a power-packed show with best apartments, plots and homes to buy in different budgets. And I'm Manisha Natarajan, joined by Sameer D'Souza, CEO and founder of Prop Equity. We together will help you take the right decision when it comes to property matters. So let's tell you what we have on the show today. We begin with a very positive news. RBI Governor surprises with a booster shot to the economy, cuts repo rates by 50 basis points. And of course, spotlight now is on the banks. Will they pass on the benefit to home buyers, and will housing loans get cheaper? Also, SPE funds emerged as the lifeline for the slowdown hit real estate sector. What are the opportunities these funds are betting on? You must watch this to see whether you're missing out on anything. Also, if you have invested in a redevelopment project that is scrapped and the builder is not refunding your money, does this amount to fraud? Legal options do you have to recover your money is what we will bring on the show. Then we'll go across the country and of course bring you the best buys in West India. Dahisar, Mumbai at ₹1 crore. In Goregaon, get you a 3-bedroom apartment, best buy in a budget of 2 crores. In Thane, it's a big range, lots of supply. But what are your top picks? In 40 to 80 lakh rupees. In Pune, we go up again to ₹1 crore. So those are the markets we'll cover right at the top. Dahisar, Goregaon, Panvel and Kalamboli. But before that, the big news and the good news first. RBI Governor Raghuram Rajan surprised everyone by announcing a 50 basis point or 0.5% cut in the key bank rate. The cut brought down repo rate to 6.75%, the lowest in 4.5 years. Well, this means home loan rates should get cheaper yet again. 1.25% has been the cut so far in this fiscal. So what do? You ensure that your rates are also comfortably below 10% now and you're not overpaying. If you are, you have to switch. Here's a recap of the best home loans on offer today with the good news that these will come down further.
I think most people expected a rate cut. Nobody expected a pause. That was good. Now, the extent of the rate cut, to some extent, we were influenced by international developments since last time, which suggested a much weaker external environment. If you look at our exports, for the first time, volumes also were a little weaker this time around, all of which suggests that we have to live in turbulent waters for a little while longer. So that was why the policy was a little different from what people expected.
Developers didn't waste a moment to welcome the big announcement. The rate cut gave the battered sector a reason to rejoice and a hope of revival. At the time where over 7 lakh homes are lying unsold in top 8 cities, developers are betting big on banks cutting home loan rates to accelerate home sales. Home loan interest rates have already entered the single-digit regime, with country's biggest lenders disbursing loans at rates between 9.75% to 9.95%. With a hope of further reduction, the industry is seeing light at the end of the tunnel.
This rate cut of 50 basis points is something which is unique, which was not really expected, and therefore it's a windfall. I just hope that now, along with the risk weightage being reduced to 50% on home loan rates, I just hope that yes, the banks pass it on and in fact introduce teaser home loan rates, which will give a great boost, as the SBI chairperson had said about a month back in her conversation with the Governor RBI.
This 50 points cut has left a wide gap between the policy interest rate and rates at which the banks lend to the end borrower. Will it nudge banks to make home loans cheaper is something home borrowers would keenly watch out for. In New Delhi with Nitika Bajaj, Oinitham Ojha, NDTV.
Surprisingly, against the prior cut of 75 basis points in the policy rate or repo rates, which is in the current fiscal, banks on an average, ICRA says, have lowered their base rates by just 30 basis points. So there's still a lot of room for banks to bring down rates, and they will. They say deposits or term deposits cannot be cut down very quickly in terms of interest rates. So we have to go slowly and steadily. So expect home loan rates to come down to a comfortable single-digit number in the next 6 months. Manvi Singh on the phone line. So let's begin our questions and answers. And Manvi, hi, how can we help you? What do you want to buy?
So I'm looking out for a property which is 2 BHK, ready to move in or to be possessed within 6 months to a year max, in western suburb of Mumbai between Andheri to Borivali. in a budget of 1.2 CR approximately.
So it's Borivali's 1.2 CR. She's still saying maximum 2 BHK if you can find me. Do you think we can accommodate a 2 BHK, Sameer, or
actually,
no?
western suburbs, including Borivali, will be a big challenge because the weighted average price of the market over there is already touching 11,200 rupees a square foot. But Dahisar East is one micro market which has also got very good social infrastructure in place. It's also kind of like a secondary market where the weighted average price is about 9,500 rupees, and that may be the right micro market, keeping your budget and requirement in mind. If you just look at some key data points, 29 months is the inventory overhang, which is not that much of a concern anymore, considering there are other micro markets which with much more higher numbers. Mid segments weighted average price is 9,550, and the price appreciation now is okay, it's 8.2% on an annualized basis, and that's the way Mumbai is going to continue for some time. Looking at the recommendations, Satguru Heights is the first recommendation at 11,200. It's a standalone tower of G+21 stories. The developer has delivered quite a few complexes in Mumbai already. The project is only 100 meters from Western Express Highway, that was your requirement, and 1.2 kilometers from the Dahisar railway station. And the second project is NL Aryavarta by NL Builders at 9,100 rupees. This project is 23 stories high. It's a IGBC green certified building. The developer has delivered about 5 odd projects already. Gym, Sky Garden, indoor games area, clubhouse, all are a part of this complex. Sparkling Wings by Chandak Group, Dahisar at 9,750. The developer is very reputed, has delivered more than 10 projects there. Clubhouse, lawn, landscape garden are all there in this project, although it's a very small project of 1 acre. And this project is 700 meters from the Western Express Highway.
So that's 3 apartment complexes for you in a budget of 1.2 crores, Manvi. Ashwini Gujral writes in and says, I want to buy a 2 crore flat in Mumbai, ready to move in 3 BHK. Any location should be a good development and decent society. And the areas that I prefer are Andheri and Chembur. So budget is on the lower side, isn't it, Sameer, for both the markets that he's chosen? So I'm wondering how will we squeeze it in?
So both the micro markets are trading above 15,000 rupees a square foot on the weighted average price scale. So our recommendation would be that you stick to Goregaon as a micro market, which is a very good micro market with all infrastructure in place, the highest possibility of price appreciation because of its proximity to the BKC complex. It's not very far from there, and that's where all the employment generation and it's become the new finance hub of Mumbai. So we would recommend you to look at Goregaon West and Goregaon East, both the micro markets well below the danger zone of 24 months of inventory overhang as well. 19 months for the Goregaon West, and Goregaon East is about 23 months. On the weighted average price chart also, they're slightly lower. With the mid segment for Goregaon West is about 14,800. and the east is about 14,200, but we've got projects lined up for you which are much cheaper than the weighted average price of the market. That's why they are meeting your criteria quite comfortably. If you look at the price appreciation charts, about 10.5% for Goregaon West on an annualized basis, and Goregaon East is slightly lower at 8%, so there's an upside potential there because that's got higher proximity to BKC. Always western suburbs on the west side are appreciating more from a livability point of view, and there is that residential angle to the west side of Mumbai. Sethi Link View by Sethia Group at 12,500 is the first recommendation. Again, a standalone tower of 19 stories. Developers delivered about 4 odd projects. Amenities like pool, clubhouse, children's play area, all there in the complex. Lalani Grandeur by Lalani Group at 13,000 to 13,500. It's an all-inclusive price of 2.15 crores. The project has got again decent amenities, rooftop, swimming pool, gymnasium. Developer has delivered about 18 projects in Mumbai already. Project is about 1.3 kilometers from Dindoshi bus stop and 2.9 kilometers from the Goregaon station. Lastly, we have Romel Grandeur by Romel Group at 13,500 rupees. This is a G+22 story project located at Vishweshwar Nagar near Goregaon East. Project is only 800 meters from Goregaon railway station and 600 meters from Goregaon Mulund Link Road, and the developers also delivered about 14 odd projects here.
So, so many, every time we do the show, get a new budget and a new specification. Sameer, Mumbai is one market where you get lots and lots of local developers who've got a very, very good track record.
Sure. I think Mumbai market has rewarded both developers and investors and end users the highest probably in the country over the last 20-25 years. So not surprisingly, you have I think about 1,000 plus developers in Mumbai.
In just Mumbai?
In just Mumbai
and
alone.
This includes Greater Mumbai?
I would say MMR all
MMR
put together,
altogether.
but also the advantage over there is that you can do a very small project also.
Right.
So
right.
that
also land is not available in large sizes or large townships, so it
That's
becomes
why
affordable for many
project.
more people
Yes.
to actually become developers and execute.
Because of the kind of returns that real estate has offered over the past years, there has been a huge number of local developers in the MMR region. But going forward, the whole PE community, the whole institutional community is talking about a huge shrinkage of the developer community.
It will happen. There will be a shakeout, always in a slowdown.
Exactly.
It will be the mightiest who will survive. If you look at PE investors, they're also looking to fund only the large developers, not very tiny developers. So, in fact, we have a very interesting debate lined up this Thursday on PE investments and what are the places or kind of developments they're funding, which could also give you a good input on what is it that you should be looking at when it comes to property investments. Where the big guys go, you can also make big bucks. And meanwhile, here, Ashwini, are your recommendations. There's Setia Link View by Setia Group, Lalani Group, and Romel Grandeur by the Romel Group. Okay, next we have Mr. Murli Parna on the phone line with us. Go ahead, sir. How can we help you?
Hi, thanks. My budget is around 80 lakhs to 1 crore. I'm looking for a 3 BHK in Navi Mumbai, and this is for my end use. And I want amenities like clubhouse, sports facilities and gymnasium.
All right. Okay. You'd written in your email that you want something close to Panvel or around Thane. Now, these are two very, very different locations. But if he's saying from an investment perspective, we already know that Thane is an oversupply market. Do you think Panvel is a better market for him to go to, Sameer?
Well, we would definitely recommend Navi Mumbai and Panvel over Thane micro market from an investment perspective.
Correct.
We feel that there's a higher amount of employment generation happening there. The new airport that has been announced now will add a lot of fillip to that region, especially Panvel, although it's purely been an investor-driven market till now. But even if you look at the large townships, integrated townships that are coming up in Panvel, the way of living in Panvel will be very different from the way people live in Mumbai, and it will be far more organized and far more better. So we feel Panvel over the long term is going to be a good micro market, although because the investors are not there in the market today, sales are slow, and that's why the inventory for Panvel is about 30 months. And Kamote is another micro market which has got far more better social infrastructure and far more livability, and also opportunity because it's got good proximity to Kharghar. It's at a very good price point of 6,400 rupees, and the inventory overhang is also extremely safe at 15 months. If you look at the price appreciation trends, Kamote is really doing well, 11% on an annualized basis, followed by Panvel at about 9% odd. So the first project is India Bulls Greens Phase 1. This project is at 6,500 rupees a square foot, a very large project of 4,800 units. It is going to have about 7 odd acres of modern amenities within the project, including an international school, hospitals and malls as well. The project is in advanced stages of construction and external work progress is going on. Mahala Residency by the Mahalsa Group at 7,000 in Kamote. This is a much smaller project of 88 units only. Although the project has okay amenities, gymnasium, private terraces, power backup, but no swimming pool, keep that in mind. Project is 1.5 kilometers from the Mansarovar railway station. Lastly, we have Om Shivam Arjun by Om Shivam Developers at 6,500. This project construction has already started and 8 slab work is going on. Project is close to the 35-meter bridge which will connect the Khandeshwar station. Developer has delivered 5 projects in Kamote and Nerul, and amenities like clubhouse, fitness center, indoor games are all there in the project.
All right, so that's the list of summary of the projects that we like. Kamote and Panvel in a budget of 80 lakhs to a crore of rupees. In fact, Sameer, I'm surprised to see that Kamote still has 11% returns annualized.
Yeah,
I mean, so
the
it's
price
still a
point is
double
still
digit.
very attractive.
Very attractive. So markets which are not overpriced haven't gone to single digits in terms of appreciation over the last 2.5 years.
Come down from 20% returns to 11%, so we don't talk about it that much. Now 11% has started to look very good.
Not bad, and any time the cycle could change. So here's a stock market which had started giving you 21%, and now over the last 6 months is giving you nothing. So your returns have anyway come down to about 14%, isn't it? So similar
but
cycles will happen.
Speaking, real estate at this point in time is giving negative returns. These 11% annualized appreciations are showing up because of the last 2.5 years of good work done in the real estate industry in terms of appreciation, and now that's why it's taking time for the appreciation to come down from 20% to 11%.
Ah, okay.
If you effectively look at the last 1 year numbers, there won't be any returns as well.
There will not be. They'll be flat. So, or they would actually have come down, but that's something we've been saying. All right, with sales slowing down to a trickle, cash-starved real estate developers have had few avenues to raise funds to expand or finish ongoing projects. Private equity funds have emerged as a lifeline, with global and domestic fund, both houses actually investing large sums into the sector. So much so that private equity inflows are at their highest in 4 years. What's behind this surge, and what are these fund houses betting on? Nikhil Narayan Sivdas has this report.
When private equity funds first flocked to the Indian real estate market between 2006 and 2008, a majority burned their fingers in projects that were ill-planned and overvalued, leaving them unable to recover their investments. But today, that nightmare seems to have been left behind, with private equity interest in the sector soaring.
The interest of private equity investors into India will increase. After all, China is drying up in terms of it. There's too much surpluses in terms of housing and real estate investments. I think India is the take and way forward.
Data from Cushman & Wakefield indicates that total PE inflows into Indian real estate were at a little over $1.6 billion in the first half of 2015, compared to $0.6 billion in the same period in 2014. Global and domestic fund houses sensed opportunities in the distressed real estate market. Experts say sales have dropped and developers find themselves with no funds to finish ongoing projects or expand their businesses, leaving them with no option but to turn to PE funds that are then able to enter at cheaper valuations while exercising more control.
A lot of private equity funds are actually long on real estate. They are betting on the long-term potential of real estate and the fact that this market is only going to mature. A lot of it is going to go towards land buying, towards funding the growth for these developers, because there is a lot of residential potential still left as far as real estate is concerned.
The government's efforts to promote India as an investment destination is paying off, with foreign funds lining up with a number of big-ticket deals signed this year, including Warburg Pincus's investments in Piramal Realty, Goldman Sachs' investments in Piramal Realty and Nitesh Estates, and Blackstone's acquisition of 24/7 Tech Park in Mumbai. These investments by global funds are being seen as an endorsement of Indian real estate and are also spurring consolidation in the sector.
More and more developers are seeking private equity opportunities. There are a lot of M&A going on in the market where certain profile of developers or tier 1 and tier 2 developers are taking over projects from tier 3 developers, for example, or brownfield projects, which is really making the whole space very interesting for investors' point of view because there is a quicker turnaround.
That is all the more relevant considering that the real estate sector's only other hope, REITs, is still stuck, with many in the industry calling for further tax clarity in the regulations proposed by SEBI. Couple this with the reluctance of banks to lend to the real estate sector and the limitation on borrowing to purchase land, and it is clear that private equity investments are the only hope for the sector to expand and survive the real estate slump. Going ahead, experts are hopeful that positive sentiments coupled with a softening interest rate cycle will lead to more private equity investments coming in. From Mumbai, Nikhil Narayan Sivdas, NDTV.
Well, PE investors definitely think that India's real estate market has some hot opportunities, and to check these out, what's happening? We've got Indian and global PE funds, industry leaders who will meet in the financial capital in Mumbai on 5th and 6th October for the Naredco and Apriya's Real Estate and Infrastructure Investors Summit. We will bring you the highlights of the event and also the big trends in real estate as seen by some of the biggest players in the sector. And coming up next, a spotlight on pocket-friendly homes in Thane, also top residential projects along the established IT hub of Kharadi in Pune. On your screen also a new project tracker this week is Juhi Luxuria in Kharghar. Check out what the project is offering.